Hello everyone, this is Team IA6 and we're going to present on the stock Suntory Beverage and Food, SBF. Domestically, Suntory has the second largest share in the non-alcoholic beverage market. Particularly, Suntory Tennensui and Boss have number one share in water and coffee beverage respectively. Just as a reminder, alcoholic drinks are not counted under the business of SBF. Suntory also runs businesses in APAC, Europe, and Americas. Its overseas businesses contribute to 55% of total revenue and 78% of operating profit. According to our estimate, SBF will earn a revenue of 1,693 billion yen and operating profit of 157 billion yen in FY24. This is 2.8% and 1.7% higher than market consensus, respectively. We like the stock over its competitors in the beverage sector, expecting further price revision, better product and channel mix, and overseas potentials. Now we'll elaborate on each of them. First, on price revision. We summarized the 4 rounds of price revisions in the domestic beverage industry since 2019, and we found that Suntory has always been among the first ones to announce the price revision, earlier than its peers. Despite its leading position in raising prices, Suntory's sales did not seem to be affected. From this exhibit, you can see that Suntory's monthly revenue never dropped year on year. On the contrary, Coca-Cola, Asahi, and Kirin seem to have more or less experienced drops in monthly sales after price revisions. We believe this reveals Suntory's core competencies against its rivals, including private brands. Some investors worry that the rise of PB is posing a threat to Suntory, but we think there is no need to be overly concerned. On one hand, PB are losing their biggest strength, which is low price. In fact, Life Drink Company has already conducted price revision in Q2. On the other hand, most PB products are not sold in vending machines or convenience stores, so it'll take time for them to gain recognition and be able to compete with Suntory. Looking forward, we think another price revision in FY24 is very likely. Suntory claimed in Q3 conference call that they will continue to lead the industry in decision-making without hesitation, which we believe is a more positive tone compared to Q2 and to its peers. Our second focus is on margin improvement, led by better product mix and channel mix. On the product side, Suntory has been strengthening its focus on its 5 core brands, which now contribute to over 85% of its domestic sales volume. This is substantially higher than Asahi, whose core brands only account for 70% of sales volume. With the core brand strategy, Suntory will continue to bring down its manufacturing costs and marketing costs. Regarding sales channel, vending machines are considered the most profitable among all channels, and Suntory has a very strong vending machine business. According to our calculation, the sales per machine of Suntory is 28% higher than the industry average and is the highest among all competitors. We believe its initiatives on VM business, such as workplace installations and integration of VM-related subsidiaries, are yielding positive results. With another structural reform plan in FY24, we think VM will drive up the margin of the domestic segment. Finally, we shift our focus to overseas. Overseas business is extremely important for beverage companies, as its profitability and productivity are 2 to 3 times higher than that of domestic segment. Within the sector, we think highly of SBF's overseas expansion. Its overseas ratio, 55%, is the highest among its peers. Summarizing the overseas expansion timeline by company, region, and pattern, we identified 4 key features that made Suntory successful. Number 1, Suntory took very early moves. It was the first among Japanese beverage companies to invest in Oceania and the US. Number 2, unlike Kirin or Daido, where some of the overseas businesses were quite short-lived, Suntory's overseas ventures are quite long-lasting. Number 3, Suntory's overseas expansion takes different forms in different countries, including M&A, joint venture, and direct establishment of subsidiaries. Number 4, Suntory strategically selects the target companies that have strong brands in the relevant country. For example, Orangina is the number 1 share in carbonated fruit juice in France. Looking forward, the company seems to be positive about expanding existing brands to countries that don't have a presence yet. The CEO particularly mentioned the potential rollout of Boss in Oceania and Thailand, as well as the rollout of energy drink V outside of Oceania. Meanwhile, the company seems to be keen to explore new markets and acquire new brands overseas, so we also take these into account in our estimate. To sum up, for FY24, we expect price revision to drive domestic top-line growth of 7%, and strategic expansion to drive overseas top-line growth of 5%. Along with product and channel mix improvement, we expect the operating margin to grow by 0.5 percentage points. This gives us a slightly more bullish take on the stock than consensus. Thank you for listening.